Welcome to the Money Master HQ podcast, where we simplify finance and look to amplify your growth. I'm Shihan Sheriff, the host of the show and also the founder of Money Master HQ. Before we begin, a quick disclaimer. This podcast is for educational purposes only. The information provided doesn't constitute financial advice. Please consult with a qualified professional before making any financial decisions for your business. Let me start with something that might shock you. According to a US bank study, 82% of business failures are due to poor cash flow management. Think about that for a moment. And here's another eye-opening fact. According to a report by PwC, only 35% of executives say they have comprehensive reporting of metrics that matter to their business strategy, despite collecting more data than ever before. Today, we are diving into something I see affecting businesses everywhere. Financial metric overload. I think we've all been there, isn't it? By the way, I've created a free Google Sheets template along with the show notes that will help you track the exact metrics we are discussing today. You'll find it in the show notes, so be sure to check that out. All right, let's move on. You know what I'm talking about when we talk about financial metrics overload or information overload, right? In today's world, you can measure absolutely everything in your business. I mean, in our personal lives, we also measure how many steps we take, how many hours we sleep, and so on. So when it comes to business, it's much more comprehensive and we measure almost everything and anything. But here's the million-dollar question. Should you? Most businesses I work with are drowning in numbers, but completely starving for actual insights. By the time we finish this session today, you'll know exactly which metrics truly move the needle in your business and which ones you can confidently ignore. Let me share a personal experience. I used to prepare dashboards with beautiful visuals and layouts with dozens of KPIs, in fact hundreds, thinking that more data meant better decisions. But monitoring and analyzing each of these metrics didn't really take me or us as a business anywhere. The real game changer came when we started prioritizing the most important metrics and focusing on just those. This revelation hit me when I was involved with Jadopedo, an e-commerce platform that was subsequently sold to Noon.com here in Dubai, the UAE. Once we narrowed down our focus to just these few critical metrics, everything changed. We gained clarity, made better decisions, and ultimately was able to sell the business. There's this brilliant quote from Albert Einstein that really captures this idea. Not everything that can be counted counts, and not everything that counts can be counted. As well as Peter Drucker famously said, if you can't measure it, you can't improve it. These two principles have guided my approach to business metrics ever since. Now, where was I seeing this problem play out? Let me describe a scenario I bet feels familiar to you too. It's month end and you're staring at this massive spreadsheet with dozens of financial metrics. Revenue figures, expense categories, social media stats, website traffic, conversion rates, blah, blah, so on and so forth, right? It goes on forever. You know you should be making smart decisions based on all this data, but where do you even begin? I call this metric paralysis. When tracking too many numbers actually prevents you from taking any meaningful action. Here's something most financial advisors won't ever tell you. About 80% of your business success comes from just 20% of your financial metrics. What about the rest? They're mostly vanity metrics, numbers that might look great in a presentation but don't actually drive real business decisions. I see this especially with clients who don't have finance backgrounds. They've been told they need to track all these numbers, but nobody's explained which ones actually matter for their specific goals. After working with number of business owners across all kinds of industries, I've identified what I call the core four. The four financial metrics that matter most for nearly every business. Let's go through them and break them down one by one. First up is cash runway. This isn't just about how much cash you have in the bank. It's about how long that cash will last you. You calculate it by dividing your cash reserves by your monthly burn rate. So let's say you have $100,000 in the bank and your business spends $20,000 per month. That gives you a cash runway of 5 months. That's 100,000 divided by 20,000. This single number tells you exactly how long you can operate before needing additional revenue or funding. Now, why does this matter so much? Well, most businesses don't actually fail because they are unprofitable. They fail because they run out of cash. Remember the stat we mentioned at the beginning of this podcast? So knowing your runway gives you clarity on how much time you have to solve other business problems. I've seen this firsthand with several startup businesses I've advised. By focusing intensely on cash runway, we were able to manage cash flows much more effectively. One client in particular was burning through capital quickly until we implemented a monthly cash runway tracker. This simple change in focus bought them the time they needed to refine their product and ultimately secure the next round of funding. Here's what I want you to do. Calculate your cash runway today. Not tomorrow, not next week, right now. Then set a trigger point, maybe when you hit a 3-month runway that requires immediate attention and action from you. Well, if it's less than 3 months, you need to start planning immediately. Let's move on to the second key metric, which is your customer acquisition cost to lifetime value ratio, or CAC to LTV as it's commonly and shortly known. I know it's a mouthful, but it's essentially measuring whether you're spending money wisely to acquire or to get customers. Your customer acquisition cost is everything you spend on marketing and sales divided by the number of new customers you gain in that period. Your customer lifetime value is how much revenue an average customer generates over their relationship with you. What's the magic ratio? Your LTV should be at least 3 times your CAC. Now, these are standard benchmark numbers, so you may want to check out if there's something more specific for your industry, but this is the standard. So if it costs you $100 to acquire a customer, that customer should generate at least $300 in lifetime value. Now, this ratio tells you if your business model is sustainable. If you're spending more to acquire customers than they are actually worth, you're building a business that will eventually collapse. Take action on this by calculating this ratio for each of your major customer segments or acquisition channels. You might be shocked to discover which marketing efforts are actually worth the investment. Third on our list is gross profit margin. This is your revenue minus the direct cost of delivering your product or service expressed as a percentage of revenue. For example, if you sell a product or a service for that matter at $100 and it costs you $40 to make it. Your gross profit margin is 60%. That is 100 minus 40, which is $60, divided by revenue of $100, and it then gives you 60%. Now, this number reveals the fundamental profitability of your business model before you factor in overhead or other expenses. It tells you whether your core offering is priced appropriately or not. I recommend calculating your gross profit margin by product line or service offering. Any offering with less than a 40% gross margin deserves serious scrutiny. Finally, we have revenue growth rate. This is simply how fast your revenue is growing, and it's usually expressed as a percentage year over year or quarter over quarter. While profit is ultimately what counts, growth rate is a leading indicator of business health. It tells you whether your market opportunity is expanding or contracting, and whether your offerings are becoming more or less relevant over time. The action item here is to track your growth rate monthly and pay special attention to changes in the trend, not just the absolute number. Slowing growth deserves immediate investigation, even if you're still growing. Now that you know which metrics matter most and not focus on hundreds of other metrics, let's talk about how to actually implement this in your business without creating a new administrative nightmare. First, simplicity is absolute key. I recommend creating a single-page financial dashboard that shows just these 4 metrics, updated either weekly or monthly, depending on your business cycle. This becomes your financial command center. For those of you without any finance background, several tools can make this easy. QuickBooks and Xero both offer customizable dashboards where you can highlight these key metrics. For a more visual approach, tools like Clipfolio or Databox can pull these numbers automatically and create beautiful dashboards. Or if not, you can have somebody build it on Power BI, a tool I love, by the way. Even a simple spreadsheet template can provide and work wonders if updated consistently. And I'm also providing you a Google Sheet template which you can use. The key is regular review. Schedule 15 minutes every week to look at these numbers and ask yourself, is my cash runway extending or is it shortening? Is my CAC to LTV ratio improving or is it declining? Are my margins holding steady or under pressure? Is my growth rate sustainable? Now, if you ask these 4 questions consistently, it will give you more financial clarity than the mountains of detailed reports you were taking a look at up until now. I want you to create trigger points for each of these metrics now. These are the thresholds that demand immediate attention. For example, if your gross profit margin drops below 30%, that's a trigger to review your pricing or the cost structure right away. Next, make sure you're comparing these metrics to the right benchmarks, either industry averages, which are useful, but I feel your own historical trends are even more important. And you can also check whether things are getting better or worse. That tells you more than how you stack up against competitors. Finally, don't keep these metrics to yourself. Share them with your team, especially department heads who can influence these numbers. When everyone understands which metrics actually move the needle, they make day-to-day decisions much better. I don't want you to think that other metrics don't matter at all. They do, but they should feed into these core 4. And it's a basis of prioritizing what's most important, what's next, and so on. For example, website conversion rates matter because they affect your customer acquisition costs. Employee productivity matters because it affects your margins. Just make sure you can draw a clear line from any metrics you're tracking to one of these core four. Let me wrap this up with something I often say. You can't improve what you don't measure, but measuring everything improves nothing. Focus on these four core metrics and you'll have the financial clarity you need to make confident decisions about your business. Hey, I've got great news, like I said. I'm providing the complete show notes along with this podcast, plus the Google Sheet version that you can copy and customize for your specific business. Just click the link in the comments or notes section to download these resources right away. Also, I want to tell you about my book, Accounting Fundamentals, a non-finance manager's guide to finance and accounting. Now, this isn't just any finance or accounting book. It has achieved Amazon bestseller ranking multiple times, won 2 international awards from independent bodies, and also has been featured by CPA Australia on their In the Black magazine as one of the business books recommended to be read. This book normally sells on Amazon for significantly more, but I've recently made it available to our listeners and to my audience for just $1. I've just activated this offer, so please make use of this. Head over to book.moneymasterhq.com/book and you can purchase this at just $1, which is a no-brainer. Thanks for tuning in to the Money Master HQ podcast. I'm Shihan Sheriff and I'll see you next time. Thank you.